Hello and welcome. You're tuning to Your Trades with me, Ankita Saxena, and with me is Kanishka Sarkar. In the next half an hour, we'll take you through how the markets shaped up in today's trading session and what can you expect come tomorrow. Well, we did see a day of declines coming in. In fact, we shut shop below yesterday's trading session as far as Nifty is concerned. We shut shop at 24,853 is where we shut shop with cuts of almost 100 odd points on Nifty. Nifty Bank also followed suit, ended the day with cuts of 0.5%, 55,661 is when Nifty Bank ended the day. Well, broader markets saw sharper cuts. It was underperforming the benchmark indices. Mid cap was trading down 0.7%, and so was small caps, that was down 0.7%. So broader markets also seeing sharp cuts. But if we talk about the sectors, then the only bright spot or the green shoots, if you will, were seen in Nifty IT yet again. Now remember, Nifty IT has been a clear outperformer for the last few sessions. It has been the shining beacon in a volatile trade. So Nifty IT was the only sector that ended the day in the green. All the other sectors were in the red. Nifty IT traded up 0.7%. Specifically, the mid-cap IT names like there is Tech M, there's Coforge, there's Persistence, LTI Mindtree. All of these were trading with gains of almost 1%. Especially Persistent System also had a bullish brokerage note by Macquarie that was maintaining it, an outperform call on Persistent System that was buoying the stock there, and the sentiments for the entire IT pack have been rather bullish. But besides that, we had Nifty Pharma that was really taking it on the chin with the cuts of 1.8%. Nifty Metal was also down 1.3%, and the PSU banking names were also reeling under pressure, especially Canara Bank, Indian Bank, Union Bank were trading with cuts of 1+%. So largely, Kanishka, it was a day of declines coming in. Advanced decline ratio clearly tilted in the favor of declines there.
That's right. The move was clearly in the favor of declines, but then we did have some stock-specific action as well. Biocon, which opened its QIP at a floor price of 340 rupees per share. Other than that, we had Z Entertainment, which was in focus the entire day on the back of the promoter infusion of 2,200 crore rupees via convertible warrants. Other than that, Godrej Properties, that was also in focus. Since the company has acquired a 16-acre parcel in Pune, which has a revenue potential of about 3,100 crore rupees. Other than that, Tata Motors, of course, was in focus on the back of the JLR key takeaways that we have been looking at. Revenue and EBIT decline is what the company is expecting going forward in FY26. But to decode the construct of the market going forward for tomorrow, we have Rajesh Palvia, the head of technical and derivative research at Axis Securities, joining us. A very good afternoon, Rajesh. Now, we have given up all the gains that we had seen yesterday. Now, is more consolidation on the cards for the benchmarks like Nifty?
Yeah, so the geopolitical news flows are, impacting to the market. Nifty is still struggling to cross its major call concentration area, which is placed at around 25,000 level. So that level is acting as a steep resistance for pullback, which we have seen in the previous day. So till Nifty not able to cross 25,000 level, I think we may remain in the range only. Even in the today's session, the major call writers have added their position at 24,900, even 25,000 strikes. So that clearly indicates that these levels is likely to act as a major supply zone for any minor pullback. On the other hand, put writers are looking, a little on the back foot, and most of the unwinding action in 24,900, 24,800 strike we have witnessed from the put writing side. So that clearly shows that, there is a possibility that, if he slips below to 24,800 level, then there could be further more downside. We may see towards 24,700, 24,600. That's the next level where we can see Nifty to trade. Looking at the current scenario, it's almost trading near to 20-day moving average support area, which is placed at around 24,800 zone. So 24,800 is the critical level for tomorrow's session. If we breaks those level, then we may see further more pressure in the Nifty. For Bank Nifty, again, on the higher side, the major call writing activity has been witnessed at 55,800 strikes. So that level is likely to act as a immediate supply zone for any minor pullback. Again, Bank Nifty is now briefly broken its 20-day moving average support area. So I think Bank Nifty, if it's a trade below to 55,600 in tomorrow's sessions, and maybe we may see further more pressure towards 55,400 to 300 kind of zone on the lower side. So I think both indices are slightly closed on a weaker note. Again, tomorrow's session would be critical for both the indices, as both indices are closed near to the critical support area. So tomorrow, if there is a gap down opening, then maybe further more follow-up selling would be there in tomorrow's session.
Rajesh, also tell us, in this volatile market, where will you be placing your bets? I see there are 2 buy calls that you have placed. Talk to us about those, and what is the target price for it?
So clearly, IT is a sector where we are seeing an outperformance, and the way IT index has moved up in last couple of days, I think here there could be outperformance. So Tech Mahindra is looking bullish. The way V-shaped recovery is taking place, we believe that Tech Mahindra can extend its gain, and possible target towards 1760 to 1770 we may see in the near term. So one can buy this stock with stop loss of 1700. Another stock from FMCG from NBFC space, that is AB Capital, managed to give breakout of its multiple supply zone on daily as well as on the weekly chart. The way stock has shown strength in last couple of weeks, we believe that AB Capital can extend its gain. The chart pattern breakout is clearly indicating that there could be another follow-up buying action tomorrow also. So we are projecting target towards 265. One can buy with stop loss of 251.
All right. Thank you, Rajesh, for those picks. With that, we'll let you go. Thank you so much for joining us. Moving on, SEBI has granted approval for NSE's expiry day change to Tuesday. Ankur is joining us with all the details now.
Yes, sources say that SEBI has granted approval for change of expiry day from Thursday to Tuesday to National Stock Exchange, and we have been given to understand through sources that approval has now come in. Remember, there was a circular which was issued by SEBI earlier stating that exchanges needs to have 2 expiry days, Tuesday as well as Thursday, while NSE had been requesting its change of day from Thursday to any other day. Remember, earlier it had announced to change the expiry day from Thursday to Monday, and later on a draft circular came from SEBI stating that there can be only 2 expiry days, Tuesday and Thursday. And finally, as per circular as per the instructions which were given in the circular, 15th of June was the deadline whereby exchange could have given their preference for choosing the expiry day, and we understand that NSE had requested for a change of expiry day to Tuesday from Thursday, and now we understand that regulator has given approval for the same.
Right, Ankur, thank you so much for joining us with those details. We will keep getting more updates as and when they trickle in. But Shrishti standing by with us with the technical charts. Shrishti, tell us what are you penciling in on the charts? Breakdown or breakout? What are you seeing on the charts, and what are the counters that you picked out for us?
Well, actually both, because today we have got one breakout and the one breakdown stock. Firstly, let's have a look at the breakout stock, and that is MGL on the charts, because you will see that the stock has been consolidating in quite a tight range for so many months now. You will see that yes, of course, the trend line has been on the higher side. The stock is slowly and steadily trying to inch higher. But what was interesting to see today is that after a 3.5% move in today's trading session, the stock was actually once again retesting its previous month, that is May month's high. And not just that, in the past 2 days, the stock has exactly taken support from its 20-day moving average and now trying to break past its previous month high as well. Almost successful over there. But yes, it was also supported by a long build up on the derivative side. So this is the first stock on the breakout side. But moving on to the next counter then, and this one is a breakdown stock. We have to mention that in the past as well, we have spotted this stock on the breakdown side, but nevertheless the stock did negate it for quite some days. But in today's trading session, once again trending lower, once again retesting that crucial support level for itself, because one when a stock actually tests its support level multiple times, then that support actually weakens, and that may be for Lupin what we see happening, because a rejection exactly from its 20-day moving average, as well as what we have seen on the technical front is a bearish engulfing pattern, is what the stock made on the technical front. So these are the two stocks, one on the breakout and one on the breakdown side. Back to you.
All right, thank you, Srishti, for getting us that technical chart check. But moving on, Shiv Puri, who's the founder and managing director of TVF Capital Advisors, finds India's valuations a bit expensive, but he still continues to have a constructive view. He doesn't see huge impact of tariffs on exports as well. Let's listen in.
Valuations still remain high, they don't remain cheap. Yeah. But within that, again, if you look at what's happening in the larger names, in the nifty kind of names, those names look very reasonable. Whereas if you look at the mid cap or the small caps, they still look high. But I think the equity markets outlook is constructive, barring geopolitical risk. Exports as a percent of GDP is still fairly low. Yeah. And most of that is still services. So in the context of goods, while it's still important to several industries and it needs to be resolved, I think at the GDP level, at the economic level for India, it should not be that material an impact.
And well, with that, it's time for a quick breather. Don't go anywhere. On the other side, we'll get you some more updates from the market. To stay tuned.
Investor Warburg Pincus is said to be evaluating a proposal to purchase a majority equity stake in affluent money manager Nuvama Wealth Management from peer PAG, as per sources who have informed ET now. Now, PAG is in talks with potential buyers to offload its equity stake in Nuvama Wealth that the PE firm acquired in March 2021. Anurag Joshi brings us all the details.
Private equity investor Warburg Pincus is set to evaluate buying a majority equity stake in Nuvama Wealth Management. Asia-focused investor PAG has been seeking a buyer for its about 54% equity stake in Nuvama Wealth. JP Morgan and Morgan Stanley are advising PAG on the sale plan, and PAG had acquired this majority holding in Nuvama Wealth in 2021. That time the company was called Edelweiss Wealth Management, and if we look at today's value of PAG's stake in Nuvama Wealth, that will be worth about $1.6 billion. And in 2021, PAG had invested $325 million in Edelweiss Wealth Management and had acquired about 62% equity stake from the prior investors. Now, just to give a background about Nuvama Wealth, that's managing about 4.3 trillion rupees of asset of clients. That's about $50 billion. And in terms of the wealth management business, currently the estimates are that the size of the industry is somewhere around 1.1 to 1.2 trillion in dollars in India. And it's been the past few months that PAG has been seeking buyers and has been scouting to offload its entire equity stake in Nuvama Wealth Management.
Anurag, thank you so much for joining us with the details of that. But Siemens, Navin Fluorine, GRSC, Godrej Properties, CG Power, they were all the top buzzers in trade today. But let's get on board my colleague Rabinder, who's standing by with the details of these stocks and why they were in focus. Take it away, Rabinder.
Well, Siemens is in focus, where Siemens and its consortium has equipped India's first high-speed rail project with advanced signaling and telecommunication technology, and the order value is approximately 4,100 crore, which includes Siemens Limited share of rupees 1,230 crore. Moving to next, on back of brokerage note, Navin Fluorine is also in focus, where Jefferies has come out with a note and they have maintained their buy rating with target price of rupees 5,280. They say that the pipeline of new contract in specialty chemical, CDMO and HPP should fluctuate in FY26 and provide growth visibility FY28 onwards. Apart from this, GRSC is also in focus, where as per ET sources, GRSC to build 2 coastal research vessels for GSI in Kolkata. Moving to next, Godrej Property is also in focus, where Godrej Property to acquire 16-acre land parcel in Pune, and the estimated revenue potential of the land parcel is approximately 3,100 crore. And lastly, CG Power is also in focus, where company has bagged an order for supply and servicing of 765 kV transformer package 7TR12 bulk by the Power Grid Corporation of India. And the total value of the supply goods including service is around 641 crore. And company said that this is the highest single order received by the CG Power. So back of this, CG Power is also in focus.
All right, thank you, Rabinder, for getting us the list of stocks that were in action today. But moving on, now India has enough oil stock and there is no immediate cause of concern. That's the word coming from the Petroleum Minister Hardeep Singh Puri. Meanwhile, sources indicate that India's oil import basket is already diversified to mitigate any risks amid geopolitical crisis. Now, ET Now's Prakash Priyadarshi is here with all the details.
The oil ministry sources are suggesting there is no shortage of crude oil in the market. In fact, its availability is not an issue, as India has already diversified its crude import basket from 22 countries to 40 countries now. Therefore, its availability is not a concern at this point of time. Along with that, the oil marketing companies are well prepared and well positioned to handle the current situation. Oil ministry sources are also indicating that the disruption in shipping routes may cause concern, as it may spike transportation costs going forward. Along with that, sources are also indicating that crude prices may pinch if the Israel-Iran conflict persists for a longer period of time. But closure of Strait of Hormuz may pose a significant threat, but it is unlikely that closing this route is in anyone's interest, considering its huge shipment. Therefore, it's a very significant development coming in. Along with that, the oil minister is reviewing the current situation with the oil marketing companies and oil ministry's officials on a regular basis, and hopeful that India will navigate the current situation to protect its interest.
All right, with that, it's curtains down on this edition of Your Trades. Kanishka and I will take a leave. Thank you so much for tuning in.